Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Hey everybody, checking in on natural gas hourly time frame. If you look for a comparison, oil obviously had a big pullback yesterday as well. And the oversold bounce went two completely different ways. Oil got the oversold bounce and natural gas did not. So we had the low and the high of the bounce attempt was up to 3361. So we need to see a higher low, which was established, and then a higher high to know that the bulls are in control of the oversold bounce. So we hit 3361, and then the attempt to break that level topped out at 3358, a double top, and then the bears took back over and we broke that original low. We never got the higher high. So the bears are still in full control here. RSI cooled off enough on that little bounce attempt on the hourly to get off of oversold levels, but the 4-hour chart is still oversold. That RSI is down in the low 20s. So I would be watching the 4-hour chart at this point, and you're going to give up some reward on this oversold bounce in the sense that you're not going to hit the bottom, you're not going to time the exact bottom, but you're going to give up a lot of risk by being patient. We have seen some green 4-hour candlesticks. We have not seen any bullish reversal candlestick confirmed on the 4-hour chart, which is what we're going to look for along with a bullish MACD cross for this oversold bounce to play out. So we have lost key support now on the daily time frame, that 330 level, and looks like we're closing below it. 325 was the next support we were watching. So we did fill this little gap to the downside, but again, the daily chart is not a bullish reversal candlestick. We did break this higher low, so the bears are potentially taking some control of this trend, but like I said, we're going to see a bounce. An oversold bounce is coming. And we have the inventory report tomorrow. If we see a bearish reaction to the inventory report, I am going to be freeing up some funds to buy this oversold dip because you can only push so far to the downside before you see a snapback reaction. So I would be shocked to see a bearish reaction to the inventory report, but if we do, that is a dip buying opportunity in my opinion. So the next support that we're looking at is the low that we've seen, 3236, and then I would be looking down at 3067. So the bulls need to show up. We'll be watching the 4-hour chart for that to occur. Let's look at the weekly chart for a longer term perspective. Bearish reversal, spinning top candlestick confirmed with the gap down, but the uptrend is still intact. Let's get rid of this uptrend line because that is not intact. But we do have this uptrend with our low and our higher low. I'm hitting the real bodies of the red candlestick, so no candlestick closes below this trend line. And that's still intact. We could pull all the way back to just above $3 and hit that level. Obviously, the bulls don't want to do that, but that is pretty much the only uptrend support line that the bulls are currently clinging on to in hopes of maintaining. Look at that volume. Volume has been huge the past month. We will see if we can get this 4-hour bullish reversal. Going to be scouting it very hard tomorrow. We'll be watching you guys. You guys has been crushed. But again, still not oversold, and that's because we had a bull break, pretty much a 180 move. If we did not have this bullish move, we would be in very oversold conditions, but we had that bounce and higher highs, and then fell off a cliff. So RSI is not oversold on a lot of these daily and longer term time frames. We're being driven down by the exponential, I should say the lower Bollinger Band resistance, driving the price to the downside. And it's all about the 4-hour natural gas chart, in my opinion. We'll check back in tomorrow, see how that inventory report goes. Thanks for watching. See you then.